Good morning, everyone. Welcome to the Vetiva breakfast meeting by Vetiva Capital in partnership with Frontier Africa Reports. In a minute, we'll be going through the performances of the equity markets and the fixed income markets, as well as wrapping up the week with outlook for today. But before, also, we'll be getting headlines from our media partners at Frontier Africa Reports. But before we get to that, I would like everyone to know that this meeting is being recorded and may be shared with third parties. It's also being streamed live on Facebook, on our Vetiva online Facebook page, if you'd like to view from there. Please note that the meeting is also supposed to last for 30 minutes. And during the course of the session, if you have any questions, you may send them using any of the comment sections, which are the Q&A and chat boxes, or the comment section on Facebook. Also, at the end of the session, we'll have a Q&A segment where you can ask a question by using the raise hand function if you prefer to speak. So with that, we'll be starting with the equities market, where Sheon from our global equities desk will take us through that. Good morning, Sheon.
Yeah, good morning, Chima, and good morning, listeners. Welcome to a new day. Like Chima mentioned, we'll be reviewing performance of some markets in West Africa. So we'll begin in Ghana, where the composite index ended the session unchanged. Volume and the value traded in the session. The volume and value traded declined in the session as it was a quiet trading day. We saw Cowbank, Ghana Oil, and MTN Ghana being the highest traded names in the session, but with fringe units also traded in some of the other small cap names. Year-to-date return stayed up at 36.34%, which is on the back of a flat close in the index, like I just mentioned. Going into today, we tipped the session to follow yesterday's trend, barring any significant change in market sentiment. So we believe market will likely see fewer trades in the session on the last trading day of the week. So that's it for the market in Ghana. We really didn't see so much activity to speak about. So going to BRVM, just like in Ghana, the activity level declined as both the volume and the value traded closed lower. The broad market index also ended the session in red to close 31 basis points. Negative. Market breadth traded flat. We saw 11 gainers and laggards apiece in the market, and we also saw profit taking in the session, as some names like CFAO Motors and Onatel that recently recorded gains being sold off. The gainers in the session were just the likes of Sicor, Cote d'Ivoire. We saw NSIA as well, which they both closed over 7% each. Or a few other names also closed up around the 7% mark, but this couldn't lift the market to a positive close. Looking at the sectoral performance, this was somewhat mixed. We saw 3 gainers and 2 losers on the day. Going into today in the BRVM, we expect market to return to a positive close, as investors we believe investors will buy up those sound names that haven't seen much demand in recent session. I think we just guide towards a positive close for the index in BRVM. So moving to Nigeria, we saw Another positive session, which is two consecutive sessions of gain, as the all-share index closed up 12 basis points higher. Market was largely lifted by the banking names, as we saw positive close on the tier one banking, most of the tier one banking names. G Bank, we saw positive close in Zenith, as well as UBA. They are closed up. Yeah, so we saw a few laggards on the day, though, with the likes of Unilever and WAP amongst them, but the loss couldn't pull the market to a negative close. So the gains in the tier one banks supported the banking sector to a positive close of 68 basis points. So the sector closed 68 basis points higher, even as consumer goods sector as well as insurance sector also closed in the green. But we saw the industrial pool a bit lower. So for activity level in the Nigerian stock market, we saw this came in lower compared to Wednesday's session, as volume and value traded declined, just like we saw in the two other West African markets. This declined 47% and 50% respectively. We saw demand in the banks at certain prices not being met. So there were a bit of demand, but offers wearing at those levels. So we didn't see those trades being matched because of offers not being at the lower level that demands were at. The banking sector accounted for over about 47% of market turnover in yesterday's session, which was mainly due to most of these tier one names being traded on. Speaking to market breadth, this came in positive. We saw 17 gainers and and 11 losers on the day. On the day. Then I think just for company news, we saw Adova PLC. That's former Forte Oil, which
Hello, Shem. Okay, that appears that. Hello, Shem. Yes. If you could recap from speaking on AP on Adova.
okay. Okay, so like I mentioned, Adova PLC announced the acquisition of a 100% acquisition in NGO Retail and Supply Limited. NGO is also another local player in the downstream space. After they executed a share purchase agreement, so this announcement was made to market participants. Since the term of the acquisition is still a bit sketchy, we didn't see any reaction to this news by investors, and any reaction to this news by investors following the announcement. So we'll continue to watch and update the house once we receive more details on this acquisition. So going into today, we expect activity level to improve as investors conclude trades on some tier one names. Also, settlers should continue to enjoy foreign demand like we've seen, while we believe market will close week on week negative, as week to date already is at negative 1.38%. Well, barring any major gain in any of the high cap names like maybe Dangote or Etel or Boa Cement. So we'll watch out for that. So those are the headlines and the news for those markets. Thank you very much, and do have a good day.
Thank you very much, Joe, for those updates. Next, we'll be getting updates on fixed income markets, fixed income and currency markets by Omarege. Good morning, Omarege.
Good morning, Chima. Good morning, everybody. I'll be taking the update for the Nigerian fixed income market for yesterday. I'll start with the money market. The money market opened about 114.57 billion positive yesterday after we adjusted for repos and the additional NTB auction. Say market was about 67.28 billion negative. This was a slight improvement from Wednesday's liquidity figures of about 90.42 billion negative. Despite the slight improvement in system liquidity yesterday, money market rate tightened by over 200 basis points to trade around 18% levels from the 16% levels recorded on Wednesday. This uptick in rate was on the back of the increased funding pressure as players had to make provision for the OMO auction debit and also the NTB auction settlement of the additional 15.74 billion sale. Our expectation for today is that the money market will trade at lower levels, barring any significant change to system liquidity. Moving on to the FS market, the parallel market gained about 9 naira to trade at 493 naira to $1 on Thursday, and this appreciation was majorly spurred by reports of CBN funding BDCs with the aim of boosting dollar liquidity. The earning window traded at a high of 412 naira to $1, closing at 411.50 naira to $1. That's a 50 kobo appreciation from where it closed on Wednesday. The earning industry turnover for yesterday slightly improved by 4.8% to close at $138.2 million from the $131.86 million recorded on Wednesday. We believe that the Naira will continue to hover around these levels in the absence of any significant inflow of FX into the system. Moving on to the T-bills market. The T-bills market traded on a bullish note yesterday as investors traded post-NTB auction sentiment. The most sought after paper yesterday was the newly issued one-year paper. That's the June 16, 2022 maturity. Offers on the newly issued one-year paper were around sub 8.5% levels during the early hours of yesterday's trading session, while bids were around 9% levels. But as the trading session progressed, we saw offers on the 1 year improved slightly to about 8.7% levels. We also witnessed some buy-side interest on the special NTB with bids hovering around 9.2% levels, but the best offer we saw in the market was 8.5%. The CBN conducted an OMO auction yesterday where they sold a total of 17.3 billion, despite offering 20 billion across the 3 usual tenors. For the short end, the total subscription on that end was 3 billion. Amount offered was 5 billion, while the total sale was also 3 billion. The marginal rate maintained at 7%. For the mid-end, the total subscription on the end was 9.2 billion. Amount offered was 5 billion. Total sale was 4.3 billion. The marginal rate also maintained at 8.5%. The long end, the total subscription on that end was 50.9 billion. Total amount offered was 10 billion, and the total amount sold was 10 billion. Marginal rate also maintained at 10.1%. We expect the T-bills market to trade on an active note today as players continue to feed their lost auction bids in the secondary market. I'll conclude with the Nigerian bonds market. The bonds market recorded another bullish session yesterday as investors reacted to the decline on the marginal rate of the 1 year NTB paper at the last auction, and also to the recently released May inflation data. We saw some buy-side interest across the benchmark curve. Despite the significant buy-side interest seen on the 2029 maturity, there was really no visible offers in the market. Offers on the tail end of the benchmark curve, that is on the 2045, 2049, and the 2050s, crashed by over 40 basis points to settle around 13.2% levels, and some trades were also dead at those levels. Overall, it was a very bullish market yesterday as we witnessed moderation of rate across board. Our expectation for today is that the moderation of rate in the bonds market will continue in the absence of any significant show of offers across the benchmark curve. That concludes for fixed income. Thank you very much.
Thank you very much, Amarige. We'll now take headline updates from Temple Ashaju. Good morning, Temple.
Good morning, Chima. Thanks a great deal So Zambian President Kenneth Kaunda is actually dead. It's no longer, it's a public knowledge at this point. He died at 97 years old. We commemorate his death as well, and we do wish that he rests in peace. He was, of course, known for his long decades of rule in Zambia, and even though copper, which is a major commodity, didn't really fare well under his administration, it was well recognized for him standing up to the colonialists, minority colonialists in neighboring Zambian country, and of course in Zambia specifically. So we join Zambians to commemorate his death now that they are mourning 21 days of, they're having 21 days of mourning for him. May his soul rest in peace. Kenya, we told you yesterday, is now raising $1 billion Euro bonds. They have successfully raised the fund. It was 4 times oversubscribed at over $5.4 billion. The paper has a tenor of 12 years and maturity date implies 2034. And that's the 4th Euro bond that they're raising in 7 years, rather. The Bank of Uganda has just unveiled a regulatory sandbox to help financial fintechs in the company to come up with some innovations. Of course, one company has already been admitted to the platform, and we understand that the bank itself will carry out oversight functions and safeguard roles on the particular infrastructure, providing a platform for companies to come up with products and services. There's a report that was released by Germany-based wellness company called Vetiva. It's surveyed 100 cities across the world, and Lagos is one of them. Lagos turned out to be the world's most stressful city after Mumbai in India. So Mumbai is 100 on the ranking, and I think in Nigeria is, yes, number 9, but at the bottom, yes. And then you have Delhi as, I think, number 98 or number 97 or thereabouts at the bottom. Basically, it's just a survey carried out to check the factors that have brought about this ranking for this company. One of those factors is actually the governance system and the infrastructure presence in those countries. AFC, that's Africa Finance Corporation, has said that its total investment in Nigeria now stands at over $1.6 billion in terms of projects and across sectors. We know that they have investment in the broadband services infrastructure that they carry out in Nigeria. I think that's in collaboration with Main One Cable. Cote d'Ivoire has just awarded 5 new gold exploration licenses to some new licensees in that country. In Zimbabwe, southern part of Africa, the IMF, International Monetary Fund, is expecting that country to grow by 6% in 2021, as opposed to the previous forecast of 3.1%. This forecast is almost actually doubles the economic growth forecast that Zimbabwe had been met or given projected for Zimbabwe before now. They cited the bumper harvest, improved power supply, and increase in manufacturing and construction as key drivers. Finally, the Africa Development Bank has just approved some 83 million euros loan for Egypt's electric sector. They had given them some facility a few months ago. So this particular one is to be used to finance the second phase of the electricity and green growth support program. And it's something that is also expected to help give a boost to the private sector in that climb and help them mitigate their recovery challenges post-COVID-19. These are some of the headlines we've got to share with you this morning. Thank you for listening.
Thank you very much, Temple, for those headlines. We are now at the Q&A segment of the session. If you have any question for any of the speakers, you may use the raise hand function or any of the comment sections available to ask your questions. We have a question from Sheung, and he's asking, with the stop rate closing lower in the auction for the 360-day bill, do you think this will be the trend going forward? as CBN also reacts to slow down in inflation, what's your forward guidance on that tenor? So I'll pass this down to the fixed income team.
Good morning. Okay, thank you, Sean, for that question. Okay, so at the last auction, the rate closed about 24 basis point lower. So the thing is, the CBN could have issued more because what they had on offer for that particular tenor was about 10 billion. So at the end of the day, they sold about 20 point something billion. So they could have sold way more than that and increase the stop rates, but they didn't. So they just kept they managed the total amount they allotted, and at the end of the day, they had to cut the stop rate. So going forward, what's really going to be the deal breaker are the subsequent auctions that we are going to have, like the bond auction that we're having next week, and then the NTB auction that we're having in the first week of July. So if they also cut rate at those auctions, so that will give us that will probably cement the idea that moving forward, the plan is for them to cut rates subsequently. But just from what happened at the last auction, though market is already reacting to the rate cut in the secondary market, we have seen rate dipped on the 1 year paper from the above 9% that we are seeing prior to this auction to start trading at around 8 point something levels. So a lot of players are already reacting. They think that moving CBN cutting rate at that auction signifies that moving forward, they are going to cut rate. And also, like you rightly said, players have also reacted to the lower inflation data that was released. So we have seen moderation in rates in both in the NTB market and the bonds market. But like I said, maybe it was just because of the amount that was on offer. So a lot of people were very cautious because they wanted to win so badly. So they ended up throwing in very aggressive bids. So at the end of the day, when CBN collated those bids, they just, took out those extremely low bids and just capped the amount that they wanted to allot, and that was why the rate dipped. But then, like I said again, we can't be very sure of the direction of rate now because the amount they had on offer was very significant. If they had maybe like 100 billion offer at the last auction, the story would have been very different. A lot of people would not have been very aggressive training their bids. So like I said, the subsequent auction will help throw more clarity as regards the direction of rate. I hope that answers your question.
Okay, thank you. Just for some additional color to that, thank you, Omorige. Sean, so basically, the last auction we saw a dip, inflation is trending down. We have, a situation where the NTB auction, the amount on offer was quite lower. So the DMO also walked away, unlike the previous auctions where we've had low amounts as well in between auctions, and the DMO would basically oversell. There are two things to it. There is a bond auction next week. There is a strong bond maturity in July. The DMO is also aware that the market will be looking to come aggressive at the bond auction next week. So there's a school of thought that is some strategy playing out, especially when you look at the fact that the finance minister recently noted that there's about additional 800 billion in local borrowings coming into the market. And when you look at that over the next 6 months of the year, you'd see that they'll need to borrow, say, about additional 120 billion every month. And now the strategy is not clear to anyone until the DMO comes out to say this is what they're going to do. So the level of government borrowing over the next couple of months is still quite huge and significant, basically. And when you look at that supply, you start to ask questions as to why rates are going down at this point in time. It doesn't make sense. Now, also, we're seeing the strong impact of base year on inflation, and most likely, if things continue and we don't see subsidy removal either in the power sector or for the oil and gas, basically, possibly there won't be any strong uptick in inflation. And we also see that CBN is starting to react to FX as well. So all these things start to paint a picture that, again, maybe we are now on a reversal trend with respect to yields. But then again, like I noted when I was commenting yesterday, June, July, August, we see very strong potentials for yields to maintain or trend down. And again, this is based on the fact that you have about 800 billion coming into the system in July. A lot of market players are front running that inflow already. Also, when you look at the fact that they walked away from funds at the last primary market auction, you start to again wonder where people will bid. Again, it paints the picture that there will be pressure and yields will trend down. But then the question will be whether they don't want short-term money anymore and they want long-term. So that's what Morege spoke to when he said the next auction will probably help us have a clearer picture. But our guidance generally is that within the next 2 months, we'll see some pressure, we'll see some buy-side action, which will push yields down. But we maintain the view that Q3 ending into Q4, we start to see reversals because fundamentals will start to play in again, and yields will most likely start reversing, and we'll see an uptrend there. But in the near term, say June, July, August, and early September, we see some buy-side pressure that will most likely push yields down. I hope that further answers the question. Thank you.
Thank you very much, Seun and Omorige and Dako, for your question and answers. We have time for one more question. If you have any other question, you may raise a hand to speak or send them in the comment sections. However, if you do not have any question for us today, you may, and you have a question later today, you may send such questions to us at research@vetiva.com, and we'll send a response out to you as soon as possible. I don't think we have any other question for us today. We thank everyone for joining this session today. We hope that you have a wonderful day and weekend ahead, and we hope to see you same time on Monday morning. Thank you for joining. Please have a good morning.